Hey everybody, welcome to today's TP Espresso, dealing with a case from the Federal Tax Court in Hamburg. We have a German holding and its daughter company, the A GmbH. They form a tax unity, so that the profit of A needs to be added to the profit of the holding and will only be taxed at the holding. The A GmbH was audited for 2012 to 15. The result was a transfer pricing adjustment due to not at arm's length service and license fees charged to foreign sister companies. This adjustment was accepted by the parties and was classified as a deemed dividend. This resulted in higher taxable profits of A as a first step. Due to the tax unity, this profit was then added to the holding. At the level of the holding, the adjustment was neutralized due to a tax technical argument. That means no additional taxes in Germany at all. The tax inspector identified in an audit of the holding that the TP adjustment never resulted in additional taxes in Germany. He did not accept that and conducted a further adjustment based on Section 1 of the Foreign Tax Code. To summarize, there were two adjustments for the same transaction. One adjustment as a deemed dividend and an adjustment based on Section 1 of the Foreign Tax Code. Sounds strange? This was also the opinion of the taxpayer, which is why he brought it to court. The Federal Tax Court confirmed the view of the tax authorities. He says that the same transaction can result in two adjustments, as long as they do not have the same tax consequences. This is necessary to ensure that the arm's length profit is taxed in Germany. This case is important, especially for transfer pricing audits for entities that are part of a tax unity. It is quite technical, but that makes it even more interesting, doesn't it? Cheers.